Good morning, ladies and gentlemen. I'm just about to give you a presentation on what's arguably the most exciting project in Africa. And it's exciting for the following reasons. First of all, it's niobium, and 80% of the audiences that I present to know nothing about niobium. But if you go and look on the periodic table, it is there. We've just recently released a scoping study that shows an MPV of plus $500 million after tax and royalty. It's got IRRs of close to 60%, and I've never been involved in a project with such good returns, and I'm sure a lot of you in the room would appreciate that. Further to this, it's in Africa, and it would be the first African producer of this metal. So a very, very exciting project. Just a little bit on the share structure. We reversed Pandy Hill, the niobium mine, into Cradle Resources in August last year. There's 128 million shares, fully diluted, outstanding, and management owns 65% of it. So there's ownership and there's a want to make this project work. We own 50% of the mining licenses, and we've got the option to purchase the other 50% within 4 years of March last year, so by March 2017. And that purchase price being around $14 million, and we're handling that as capital spend towards the end of the project. We believe in strong management teams. We believe that good projects are built by good managers. And to that extent, Craig Burton, who's my business partner, is the chairman. Craig has had a history of developing mines throughout the world. He was the founder of Mirabella, founder of Exco, founder of Panoramic, which all nickel mines. He was the founder of Capital Drilling, which is the biggest drilling company in Africa. So he's got an incredible reputation in the venture capital and entrepreneurial space in Australia. Myself, Zimbabwean by background, operations in South Africa, gold, platinum. Went over to Australia with coal, mining engineer, and technical. Been involved in building and optimizing mines. We've got Didier Mercier, who we brought onto the board with his relationships in Tanzania. He's the honorary consular to Tanzania from Australia. And then Keith Bowers and Neil Inwood, two very strong technical guys. Keith has got African experience. He's a metallurgist by background and understands flotation, which is what this project's all about. With Neil being a very smart resource and exploration geologist with his master's in geology. So a strong team, and a team capable of building this mine. So what is niobium? It's an alloy, it's a metal used in the alloying, and what it does is it strengthens and lightens up steel. There's three major growth industries in the world: automotive, structural steel, and pipelines. And just for your help, 200 grams of niobium put into the steel that makes a standard size car, which is around about 1.3 tons, it reduces the car's mass by 130 kgs. So it's all the greenhouse effects, it's the fuel efficiencies, and that's what niobium's used for. On the structural side, there's two bridges. Most of you have been to France, would have gone across that bridge some or other time. 0.02% of niobium put into the steel that makes those bridges reduce the mass of the bridges by 60%, 60%. The pipeline industry, gas pipelines, the growth in the pipeline industry with more gas being used as energy. Niobium's used in these pipelines to lighten up the pipes. They're easier transportable, easier stored, and just easier to work with. So a real growth point. First niobium produced in the late 60s, and the market only started developing from then. So relatively new. 20% of the steel that's made in the developed world, the Europes and the North Americas, has niobium in it. It's used to make what's called a high-strength, low-alloy steel. And this is compared to only 10% in the developing world, really the Asias and the Africas. And we are of the opinion that as qualities of steels increase throughout the world, as people move to higher grade steels, the likes of niobium will be used more and more and more. The big banks are saying steel industry is going to grow between 3 and 5%, and because we believe high quality steels will go quicker than that, we can reasonably assume that 5% over the next sort of 10 years is what the niobium industry is going to grow at. And this is pretty important to understand as we come into production as a early stage project. It's a pretty big market, $2.2 billion. The likes of graphite, for instance, the graphite market's about an $800 million market a year. So it's about 2.5 times the graphite market, so a reasonably big market. On the supply side, there's only 3 producing mines. CBMM produces about 85% of the world's niobium, and then IAMGOLD and Anglo producing each between 7 and 8% of the world's supply. Anglo and CBM are in Brazil, with IAMGOLD being in Canada. So 92% of the world's production out of one country, with Canada having a small portion, and all production out of the Americas. There have been no producers come online since 1976, even though the market has grown about 8 times. We'll initially only bring on about 4% of the world's market. So if you think that the market's going to grow at 30%, bringing on 4% in the next 3 to 4 years is not going to shake the market, the market share of any of the other current producers, which is important. What is really been fascinating as we've studied the other greenfields niobium projects worldwide. A lot of them have had feasibilities done. Most of them have had feasibilities done. And we are confident that there's no new producers that are able to come online economically at current niobium pricing, which is around the $40 a kg or $40,000 a ton. Our projects in Tanzania, a good country as far as Africa goes to do business in. The Tanzanian people are friendly, the laws are well regulated, mining's well understood. There's been some big mining companies with projects there, AngloGold Ashanti, Barrick. So it's well known as a mining jurisdiction in Africa. We've got excellent infrastructure, got an international airport 15 kilometers away from our tenement area. We've got the main road that is the gateway into Zambia and Malawi to Dar es Salaam, which is the only port in the area, goes just north of our tenement, and the actual railway runs through the north end of our tenement area. So infrastructurally, very, very well positioned tenement. We've got enough water in the area for our project, and there's even electricity, although our scoping study is focused on heavy fuel oils, and Mr. Total has given me an idea after his last presentation. We've just had our resource updated through a recent drilling program, and we've got 82 million tons of 0.52% niobium pentoxide material. Now, just for those of you in the room that don't know niobium, to try and put that into something that you can understand, that's equivalent to about 6 million ounce gold resource at around the 3.5 to 4 gram a ton, depending on what gold price you use. So quite a significant resource. Our scoping study just released. We focused on a base case of 2 million tons per annum, and why we did that was it helped us benchmark against one of the producers, niobium. It's a similar size operation, but they're 600 meters underground, where ours is a 0.4 to 1 strip ratio open pit. It's on a mountain, and you go and you take this open pit as you go. The next phase of the study, however, will focus on a staged approach where we would start off at around the 1 million ton per annum and work to 2 million ton per annum. And what we'd be achieving through that is reducing initial capital to around the $100 million to get us into production, and then also helping us come into this niobium market softly, and then grow once we're in the market. So 2 cases, both cases very, very economic, and as I said, independent numbers, MPV 10 of over 500 million in both cases. Note, I've shown you the infrastructure, great infrastructure. With the drilling, we put in 15 holes, managed to increase the metal content by 50%. So we know the niobium's there, and we know the more we drill, the more confidence we're going to get in this. We're not after a huge niobium resource, we're after a high-grade niobium resource, and Neil Inwood, our geologist, and his team will be driving that quite hard. We've been very focused on met test work. We've done quite considerable met test work. Keith's been driving that, and we're very pleased with the outcome of that. And comparative, it compares very favorable to current producers. And we now know that it's recoverable. It's about optimizing our plant and our structures going forward. Just on timing, we're running into pre-feasibility stage and DFS. It will take us about 15 months. Q3 2015, conservatively, we'd be finished with a definitive feasibility stage. And it's really going to be focused on drilling up our ore resource to indicated, completing some pilot met test working, and the detailed design that goes with all of that. Just a quick summary, we're in project financing at the moment, and we're financing up for the DFS. We're going to be focused on this modular processing plant, as I've spoken through. And then after that, it's just about increasing, getting some confidence as far as indicated resource goes, continuing the development work, and updating the ESIA, Environmental, Social and Impact Assessment, which has already been done. We're just updating it. And that's really the cost of the DFS. There's 60% of it's going into the drilling and the met, with the portion into the engineering and the ESIA. And that's my story. Thanks very much.